This is the Definitely Uncertain podcast, brought to you by Goldrock Capital. Each week, we look at how high net worth families can improve their lives, decisions, and investments in a deeply uncertain world. We always aim to provide practical information, even if we can't offer specific investment advice. Welcome, everybody, to the Definitely Uncertain podcast. My name is Darren Rockman, and I'm a partner with Goldrock Capital, the 20-year-old multifamily office servicing high net worth families in Israel and around the world. Today on the podcast, I'm pleased to have Dror, who is the co-founder and managing partner at Israel Secondary Fund in Herzliya. Hi, Dror, how are you?
Good morning. It's a pleasure being here. Thank you for the invitation.
It's a pleasure having you on. Thanks for joining. So we wanted to talk a little bit about Israel Venture Capital today. Obviously, the venture capital industry has grown massively in Israel, and you're a key part of that industry. The success of Israeli high tech, are the elements that created that success for the last 25 years, are they still in place in Israel today?
There is no doubt that actually the fundamental that's created this amazing market in Israel actually still exists. The entrepreneurship, the background of young kids that actually have a tremendous background from the army and some others, the strong education system in Israel, and the nature of being isolated in a not very friendly environment certainly are in place. And I do think that actually this is currently kind of a great time for the Israeli VC overall. And I can say that Israel has become, I would say, the second leading hubs of technology worldwide. And currently, you can see that more money investing per capita in tech in Israel than in Germany and France. And just to name a few numbers, in the last decade, $32 billion been invested in the Israeli technology, $82 billion been exited. It's second to the Silicon Valley. So it's basically a multiple of 2.5. And that's one of the main reasons you can see most global players are existing in the market. And we have more than 330 R&D center of leading global companies, just to name a few, like Google and IBM and Alibaba.
So, Dror, you guys sit in a very interesting position within the Israeli venture capital market. You've got a sort of 3,000-foot view. Tell us a little bit about what it is that you do at Israel Secondary Fund.
Great, thank you for the questions. Israel Secondary Fund is providing liquidity to the tech secondary market in Israel, and we do basically three types of transaction. We buy LP position in other funds, so we provide liquidity to investors in funds. We provide liquidity to technology companies, so we buy from employees, we buy from founders, from management, and from early stage investors. So we buy in single company and we buy from portfolio. And recently, we also started to do what we call GP-led or structured secondary. So we provide liquidity or structuring for funds. Since exit in Israel take between 8 to 13 years, the journey is fairly low. So the need of the funds and the need of the company is actually changing over time. And we allow the fund to raise more money to support the existing portfolio. And we allow the investors to decide whether they want to continue or not.
When you look at the more recent vintages of Israeli venture capital funds, 2019, 20, and then 21 and into 20 and 21, how do you see the returns playing out for those vintages, or is it too early to tell?
First, I think it's actually way too early. Since exit takes between 18 to 13 years, as I said, it's a fairly very early stage of all those VCs, and most of the Israeli VC are investing in early stage. So it's still very early in the journey. Overall, I must say that from 2008, we do see substantial improvement of the managing of Israeli VC. We see multiple of group that actually established themselves as a global leaders in many places, like cybersecurity and others. And I would say even that many of them actually starting to build track record of multiple funds with providing returns, consistent returns in multiple funds, which is, I think, were very important overall for this industry.
Right. One of the things we see in American venture capital is the repeatability of returns for certain groups. So there are the top tier funds they tend to do very, very, very well. Are we seeing a similar dynamic develop here in Israel?
I think we starting to see number of groups that establish themselves, raising 3, 4, 5 funds, and starting to show consistent returns. We do need to understand that the Israeli market is substantially smaller than the American, and obviously we're expecting those groups to raise substantially lower, smaller funds compared to the US. But we do start to see consistent return among groups. But as I said, because it's a fairly, it's from 2008, so it's still fairly early in this process of starting to see. But I can actually, obviously, can see number of new emerging managers and new groups that are actually performing very well, investing in global scale.
Right. And when you look at some of the older groups, the ones that are sort of got going in the 90s here in Israel, how do they, are you seeing consistency of returns there, or is it less consistent?
This is actually a very interesting question, because we can see that there is a change in generation. There are few houses that actually discontinue, despite the fact that they had an amazing return in some of their latest funds. Just to name few, Genesis and Gemini, for instance, that did not continue. And new groups actually emerge, providing a very nice and high professional management like Glilot and TLV and others. And I think actually we do see a very dynamic, high dynamic in this market of new groups actually entering in the market, and some of the older groups that actually, like Vertex and others, that actually continue to deliver good returns over time.
Okay. One of the criticisms of the Israeli venture capital industry that we hear often is that Israeli tech companies sell out too early, and that Israeli venture capital funds push their companies to exit way before they've matured into big businesses. And as a result, we have very few checkpoints and tethers here in Israel. Most of the companies get sold. Is that a justifiable criticism in your view?
I think what we see currently in the market is actually very, very different dynamics than what you actually just described. And we can start to see returning entrepreneurs, returning funds that's starting to build large companies. And we currently have 28 unicorns in Israel. Just to name few: Riskify, Sisense, WalkMe, Upflyer, Payoneer, Monday, Lightrix. All of them actually are, or many of them are, returning or serial entrepreneurs investing with the same groups. And when they establish themselves, they actually establish with the notion of actually building a big group, big companies. Having said that, we do need to take into consideration that some of the group that actually emerged, some of the VC that emerged in Israel are fairly small VCs. And they are building their track record, and they're actually investing in companies that they believe that it's actually technology sale. And for technology sale, we anticipate $300 to $700 million in sales, which actually can bring incredible returns for those investors.
Let's talk a little bit about COVID. Obviously, it's created huge uncertainty globally. How is it impacting the Israeli tech market?
Just to name few challenges that actually I see for the Israeli companies, especially that are more remote from the market, whether it's actually in the European market or in the US market or in the Far East market, they're actually more remote from those markets. So we do need to take into consideration that doing a new business with new clients, especially on the B2B area, is going to be challenging for any Israeli company. On the other hand, since it's a huge unknown, what is going to be the length of this crisis? When was 2008, when it was a financial crisis, it was actually a local crisis in the US, and it was obvious that it's a crisis, but it's going to be limited in time. With the COVID, there is huge unknown what is going to be the length of this crisis. And therefore, when the crisis occurred, we actually recommended our portfolio companies to take action and actually to plan for 18 months. Today, that we are about 6 months close to 6 months since the crisis started, no one actually knows that 18 is going to be enough. And maybe actually it's going to be longer. In addition, many of those companies started to work at home. Now, it was easy to work remotely because in many tech companies, they actually used to work remote. And they have the infrastructure, which is actually cloud-based, which was actually very easy to move home and to start working. But managing teams, working together as a team, plan for having a new plans, signing new clients, it's a very, very different story, working remotely. So this is a major challenge for some of the Israeli companies, and obviously traveling.
So I want to take you now to your specific market, which is the market for secondary transactions. What do you expect to see over the next few years as a result of COVID in the Israeli secondary industry?
The nice thing about the secondary market is that actually you do have sales or sellers always. Even in up market, in down market, you do have sellers because this is the nature of this market. It's a long journey. There are more and more stakeholders that need some type of liquidity. When there is a crisis, obviously during March, we immediately started to see the direct secondary picking up substantially because there were all those employees that left the companies. They had 3 months to exercise their warrants and they need some type of solution, quick solution. From our past experience, we know that it takes basically between 2 to 4 quarters until the bid and the ask, the gap between the bid and the ask is actually closing. And therefore, we anticipate to see substantially more deal flow during Q4 and Q1, or starting Q4 and Q1 next year with regard to LP positions and GP restructuring and obviously secondary direct. So we do anticipate substantial increase in the need for liquidity going forward.
And what about pricing?
Now, it's actually very interesting to see currently, both in the US and in Israel, pricing of primary investment did not change substantially. So companies that were in the process of raising money, raise money in, I would say, fairly close valuation compared to post-COVID. And I think that's
pre-COVID.
The pre-COVID. Having said that, I think this is actually going to be changed as liquidity will become more and more substantial. The need for raising capital will be harder. It actually will be harder to raise more capital. So I do see some pressure on prices. And I remind you that pre-COVID, we were actually in all-time high. So we anticipate to see some kind of pressure on prices. And obviously, it will influence also the secondary market.
Okay. I'm going to finish off with asking you about tips for investors. High net worth investors looking to invest in either the primary VC market or the secondary VC market. What would be your top 2 tips for them of things they should be looking out for?
First, I would say for any wealthy individuals, whether they're coming from the VC background or tech background or not, I would actually not go directly now. I would go through, funds and do those investments because I think actually it's become very competitive. It's become much harder to do direct investments, and it takes a long time to develop those relationships. If you haven't, and it's your first investment in technology, I think that actually secondary can be a great way to test the water and to get to know better because you're taking fairly small risk and getting fairly wide exposure. If you want and you have more experience investing in the tech market, go to VC and invest with VC. And then you also need to divide, whether you want to do very early stage or a later stage VC. But I would actually say that my first recommendation is to be, cautious today and take into consideration that it actually might take longer. The crisis might take longer than anyone actually anticipate, and the influence we still don't understand the full influence as we are currently seeing, the global monetary expansion and who knows what will happen after the election and early next year in the US. And the second one is be very cautious of going directly. I would actually go indirectly through funds.
Interesting. All right, Dror Glass, thank you very, very much. That was really interesting. Best of luck, and thanks for joining the podcast.
Thank you very much. I really appreciate for the invitation, and I'm happy to stay in touch. Thank you very much.
Okay. Thanks, everybody, and thanks, everybody, for watching.